Hello everyone, how are you all? Are you able to see the screen, audio as well as video? So students, I give you one question in homework that was with regard to your comprehensive booking of the journal entries, balance sheet, P&L and your journal ledger accounts. So you need to make the everything from the transaction which has been given and you need to perform it till the end. How many of you have done it already? Come on, just confirm me. If not done, you have to do it by yourself. Not if even of not this question, you can pick another one which you can do as per your comfort. But yes, you once you do it yourself, you will have that confidence of knowing the actual transactions which are going through. Okay, so I will just read out the transactions and we will do a journal entry orally that we can understand, and then we can see the ledger postings, we can prepare the trial balance, we can prepare the balance sheet, we can prepare the P&L. Okay, first confirm me everyone is able to see the screen and audio video is perfect. Okay, okay, so illustration number 22 on your page 113 of your notes, you have generalize the below transaction in the books of Gaurav and post them into ledger and prepare the trial balance for June 2022. So they have not given an year, they have just given a month. So this is a month for which we have to prepare the uh, journal entries, we have to prepare the ledger accounts and everything like that. Okay, so let's start with the first transaction over here. They have mentioned that on 1st of June, Gaurav started business with 10 lakh, of which 25% of the amount is borrowed from wife. Some students are saying that we have completed. Okay, beta, but send your total of the balance sheet. Okay, so that I can verify when I prepare it. Send your total of your balance sheet and what is your profit or loss. So for the first entry, we have Gaurav starting business with a capital of 10 lakh, and out of the 10 lakh, 25% is borrowed from wife. Borrowed, that means it's a loan. So we will have some cash in our business. So that is cash account debited with 10 lakh rupees because cash has been introduced with 10 lakhs. The capital, the self amount was 75% because 25% was borrowed from wife. So 25% of 10 lakh is 2 lakh 50,000. That is mentioned as a loan from wife. This is what? This is a liability. This is a liability. Obviously, we need to pay this off. We have borrowed it, so it will be paid off after some time. So we have a liability and we have the owner's capital. That is the owner's fund. So that is credited to the capital account. So what is the journal entry? Cash account debit with 10 lakhs. Owner's equity, that is capital account debit, credited with 7 lakh 50,000, and loan from wife has been credited with 2 lakh 50,000. That is the journal entry for the first transaction. Now we will first do the journal entry here, then look at the treatment which they have given. On June 4th, he have purchased the goods from Aniket worth rupees 40,000 at 20% TD. TD means the trade discount, and 1/5 amount paid in cash. So trade discount is a discount which is given normally. If you go to a shopping mall, they say 50% discount. So 50% is a trade discount. So here we have 20% discount. So 20% of 40,000 gives us 8,000 rupees. So the goods is costing 32,000. Goods is costing how much? 32,000. So we will have purchases account debited with 32,000 to Aniket's account, who is a creditor. But how much for Aniket? 1/5 of the amount paid in cash. So that means cash would be 1/5 of the total amount. So what is 1/5 of 32,000? 1/5 of 32,000? That would be 6,400. Yes. And if I deduct 6,400 from 32,000, that would be 25,600, which is still pending to be given to Mr. Aniket. So that is the journal entry which we are looking for. Let's see if they have done it correctly. So purchases account debit 32,000. 6,400 is the cash account and Aniket's account is 25,600, being goods purchased at 20% trade discount and 1/5 paid amount in cash. So that was your second journal entry. Very good. Going to the third one, cash purchases rupees 25,000. The simplest one, that is purchase account debit 25,000 to cash 25,000. So this is the purchase account debit 25,000 and to cash 25,000. Okay, moving on. Sold goods to Vishakha 30,000 at 30% trade discount and received 30% of amount in cash. So the goods are sold for 30,000 and we will deduct the trade discount, which is 30% of 30,000. 30% of 30,000. It would be 9,000. So goods are sold for 21,000 in actual and 30% amount is received in cash. So 30% of 21,000, that would be 6300. 6300 that is received in cash. So the balance amount would be due. Okay. So we have cash account debit, that is 6,300, which we have received in cash. Okay. We have, they have done a mistake over here. This should not be to sales account. Here we will have this Vishakha's account, that is our debtor, with 14,700 debited, and down we will have to sales account, that is 21,000, because the sales are of 21,000. So that is the correct journal entry. Please correct that in your notes. Okay. Then going forward, on June 12th, we have deposited the cash into bank. So bank account will increase. So bank account would be debited and cash will go out. So cash will be credited. Bank account debit to cash account 20,000, 20,000. Then uninsured goods destroyed by fire. The goods have been destroyed by fire. So this will reduce. So I will reduce my purchases. So purchase account will be credited and my loss will go up. So I will debit my loss, that is loss by fire account. So loss by fire account debited to purchases 5,500. That would be the general entry for this. Next, we have received a commission of 3,500. So we have received, the cash has come in, cash account debit 3,500 to commission account, that is 3,500. Next, June 22, paid to Aniket 25,500 in full settlement of the account. How much was due to Mr. Aniket? Actually, we have purchased the goods from Aniket over here. If you can see this, the box right here. So we have purchased 32,000, we have paid the cash 6,400 and we need to pay 25,600 more to Aniket. However, how much we have paid? We have paid 25,500 in full settlement. That means what? He has given us a discount of 100 rupees extra. So that would be our income. So what should be the journal entry? If we have paid to Aniket, so his account will be cleared. We will debit Aniket by 25,600. But sir, we have paid the cash of 25,600. So yes, cash account would be credited with 25,500 only. The 100 rupees will go to the discount account. So Aniket account debit to 25,600 To cash account only 25,500 because that is being paid, and then the discount account by rupees only 100. I hope this is clear to everyone. Okay. If anybody has any doubt whatsoever, you can just bring out in your Q&A and I will answer it. Okay, moving on. Then we have the journal entry of June 25, cash stolen from cash box, rupees 1000. So cash has been stolen. That is the loss. We need to debit. That is theft. Okay, loss by theft account debited by 1000 and cash has gone out. So cash account would be credited 1000. Next, June 27, received from Vishakha 14,500 and discount allowed 200 rupees. So how much we were yet to be received from Vishakha? Total amount was 14,700. This was the amount which we need to receive from Vishakha. But how much we have received? We have received only 14,500. So what about 200? It is the discount allowed. So this is our expense. We will debit the expenses. So here cash account, the amount is received 14,500. Discount given, that is the expense. So we have debited that with 200 to Vishakha's account 14,700. Okay. Then we have June 30. Interest received 2,400 directly added to the bank account. So we have received an interest which is directly added to the bank account. So obviously bank account would be debited by 2,400 and interest account would be credited by 2,400. So that were the whole general entry which we have done for this transaction. And now on the basis of this, we have prepared the ledger accounts. You can see we have all the transaction mentioned here, the cash account, capital account, loan from wife account, purchases account, Aniket account, Vishakha account, sales account, bank account, loss by fire account, commission account, discount account, loss by theft, and interest account. So everything is mentioned over here. Now, what they have done, they've prepared a trial balance. How we will prepare the trial balance? Whatever is the balance carried down, if it is on the debit side, we will write on the opposite side in the trial balance. So that was the concept which I taught you. So here we have 2,400 as you can see in interest account. So interest account here, it is mentioned on the credit side. Okay. So that was just one example which I was showing you. So this was the trial balance which is prepared. If there is any doubt in it, then we can discuss. Otherwise, we can just prepare the balance sheet and P&L account. Okay, so on the basis of this trial balance, we are going to prepare the balance sheet and P&L account. Okay, so I will have trading and profit and loss account for the period ended 30th of June. So we will have particulars, amount, particulars, and amount. Then we will have the balance sheet. As it 30th of June, I think it was 2020. Always remember we write as at when we write the balance sheet, because balance sheet is the situation of your liabilities and assets as on one date. Okay, that on 30th of June, how much liability I have and how much assets I have. So it tells the information about one date. However, our PNL, it is for the whole period. So that is why I have mentioned there for the period ended 30th of June. Okay, do not mix this up. If you can see the trial balance, it is also mentioned as at, not for the period ended. Just have a look here. So trial balance is as at or as on 30th of June 2020. Okay. So I've got some answers. We have the net loss of 31,200 and the balance sheet total is 968800. Okay, we will just check it. So now let us do the postings based on our trial balance. Okay, second. So this is the trial balance. First account, I have the cash. Cash is an asset, so obviously it will go to the balance sheet. The amount is 946,400. So we have cash 946,400. So that is the first thing which we did here. Okay. Then second account, we have the capital account. It is 7,50,000. So capital, I will write it into the inner column because we are going to add the profit and loss as well into this. Then we have loan from wife, 2,50,000. So loan from wife, that is a liability. So we need to pay it back. It is 2,50,000. Okay. Next we have purchases account at and it is on the debit side, so it will go to our trading account. Oh, I have written the capital and everything into my PNL. Okay, I will just change this. So now this is my balance sheet. Obviously some perks of having technology, I can just cut it paste. Obviously you cannot do that. Okay, now my balance sheet is upside and my trading and PNL are downside. Here we have all our liabilities and here we have the assets. Okay, so now in our trading and PNL account, we have the purchases at 51,500. So on the trading account, I will write to purchases account 51,500. So that is our first entry in the trading NPL. Then we have Aniket's account. What is Aniket? Who is Aniket? So you can see there is no balance over here because Aniket has been paid in full. The balance is zero. So nowhere Aniket needs to be mentioned because the balance is zero. Then we have Vishaka's balance. It is also zero on both the sides. So nowhere it has to be mentioned. Then we have the sales account to be 21,000. So we will have by sales account 21,000. Next. Bank account 22,400. So bank account, if it is mentioned with the balance of 22,400, it will go to your balance sheet as an asset 22,004. Then we have loss by fire account. It is at 5,500. So where it will go? Obviously to my profit and loss account. Loss by fire account 5,500. I have written it down in the trading and P&L because it is a part of my P&L account and not the trading account. So on the top we will have all the trading account entries and bottom we will have the P&L entries. Then we have a commission account, that is commission received. How much it is received? 3,500. So income should be credited by commission account. That is 3,500. Next, we have discount account. The discount account has a debit balance. Debit balance, that means it is an expense. If it has a credit balance, so that means it has an income. But here it was debited, so that is why I've mentioned it into the expense. Then we have loss by theft, that is 1,000. So this is again an expense. And at last, we have interest account on the credit side. That means it is an income. Okay, so that becomes 2,400 by interest 2,400. And that completes my trial balance over here. Now what I have to do, I have to just total. Okay, so now here you can see as the question did not give any information about the closing stock. So we have not written it, but obviously question will give you the information. So what we do for the closing stock, we credit it from the trading and P&L account and then transfer it to our balance sheet as stock. Okay, but here no information is given, so we are just skipping this right now. But that will not be the case when you have given the question of a balance sheet and P&L. Closing stock would be there. Okay, because obviously if you have purchased the goods for 51,500, it won't be sold just for 21,000. There would be some goods remaining. Okay, so if I do the totals, here I have 51,500 and here I have just 21,000, but the total should be 51,500. So I will have a gross loss as my balancing figure. And what would be the loss amount? 51,500 minus 21,000. So that would come to 30,500. If the gross loss has been carried down from here, so it will have a cross entry. It will come here. It will be to gross loss brought down. How much? It would be 30,500. Now let's do the totals over here. So on the debit side, we have 30,500, 5,500, 1,000 and 100. So the total is 37,100. Whereas on the credit side, we have just a total of 3,500 and 2,400 as the income. So I will deduct these two figures from 37,500 and whatever I will get, the balancing figure, that would be 31,200. This is my net loss. And what we will do for this net loss, it will be transferred to capital account. It will be transferred to what? Capital account. So it is loss of 31,200. I will go to my capital. I will deduct loss for the year 31,200 from the capital of 77,50,000. So my capital would be, the total would come to be 718800. That would be my total. And if I sum both the sides, so my balance sheet total on liability side is 718800 plus 2,50,000, that is 968800, and this should also be the total over here, 968800. Just check whether it is fine. So that would be all for my balance sheet and P&L. Is there any doubt? So that was a second question which we did for the whole process of our accounting. Obviously, there is much more to go, but there are small things which we need to cover. The major chunk is now done. Okay. So now let's go back to our notes. So you will have one more question over here. What you have to do, you have to post them into the ledger, you have to pass the journal entries, and you have to prepare the trial balance. So that is a homework, and you can do it as per your convenience. Your answer was right. Okay, great. Moving on. There are a lot of questions which you can come across, but obviously we will do some when we have some twist or we will have some adjustments, then we can do more of such questions. Okay. So now let me come to the topic, the opening entries, the closing entries, the transfer entries, and the rectification entries, which we need to do when we finalize our books of accounts. Sir, what do you mean by finalization of books of account? As I mentioned, there is an accounting period. There is an accounting period for which we prepare books. So what is the counting period? It may be from 1st of January to 31st of December, or it may be, sorry, it may be 1st of April to 31st of March. First one is the calendar year. The second one is the financial year. Okay, so there can be two cases. What is the opening entries? Opening entries are all the balances which are coming on the opening date, whether it can be the 1st of January if the company has the calendar year as the financial year. But if the company has 1st of April as the financial year, so all the entries on 1st of April would be their opening entries. What do you mean by opening entries? Let us go back to our leisures. So if you see here, let us see the account which is being displayed. That is the furniture account. Okay. You can see in the furniture account, there is some transactions. There are some transactions. Like here, they have said by Narendra Kumar's account, there is 1200 credited and the total has been made, so to balance carried down has been done for 1200, and in the next period the balance brought down. So this is the cross entry because the period ended on 31st of January, then the new period will start on the next day, that is 1st of February. So the balance carried down will be brought down here. it will be brought down over here. So that is the opening balance of this ledger account. This is the opening balance of this ledger account. We can see this in our example as well, where we have prepared the journal entries and the ledger accounts. So see, like this one, we had a salary on 31st of December 25,000. So that was posted to the outstanding salary because it was not paid yet. To do the balancing on 31st of December, what we did? We did a closing entry, that is to balance carried down to the next year. What is carried down? The balance which is being carried down to the following year, because if it is not paid in the current year, it will be paid in the next year. So this is the closing entry which I am talking about. What is the closing entry? The entry which is done to close out the ledger for the year. So this is the closing entry. But in the next year, on first of, just opposite side, okay, the balance here is on the debit side. So I will transfer it to the credit side. On 1st of January 2024, it will become by balance brought down 25,000. Let's take one more example and this will be full clear to you. Let's say if I have a cash account, my first day of the business was 1st of January 2023 and I started a business with a capital of rupees 50,000. I started the business with a capital of rupees 50,000. So that was my opening balance. Yeah, I would say the opening figure of my cash account. Then on, let's say 31st of January 2023, I purchased some goods by purchase account. 5,000 is the amount of purchase. Then on 31st of May 23, I did some expenses. This is just an hypothetical answer. Sorry, hypothetical example by which we will get some explanation. Okay, so my expenses were 7,000. Then on, let's say 4th October, random dates I'm taking, we have paid to any creditor account 4,000. Okay, now I have got the cash of 50,000, out of which 5,000 is used for purchases, 7,000 is done for expenses, and 4,000 is paid to creditor. Can anyone tell me what is the balance left? What is the balance left? Obviously, sir, we have to do the total. Yes, beta, do the total. I have 50,000 in the start and I have expenses 5,000, then 7,000, then 4,000. So how much money I am left with? What is the balance which I can carry later on? Sir, that would be 34,000. Yes. So 34,000 in the period end. When this period will end, let's say my last day of the period is 31st of December 2023. So I will close my books and I will say I have a cash balance of 34,000 in the end. What I have done actually, I have passed a transfer entry from 2023 and I will bring that in 2024. For example, your accounts will end here. Now your books for 2024 will start. So my first day would be 1st of January 2024. All the balances which are remaining from the last year will come here. It will be to balance brought down. And how much would be the balance brought down? That would be 34,000, because obviously that cash is nowhere gone. It will be kept then and there only. Okay, but the year is closed, so obviously we need to close our books also. And again, what we will do, we will do some purchases. Let's say purchases are done for 4,000 and there is no other transaction. So again, the balance will be carried down, 34,000 in total over here. And here I have 4,000 rupees of purchases. So balance remaining would be 30,000. So this balance will be carried down to the next year. This is 31st of December 2024. So on the next year, what will happen? This balance will be again to balance brought down. And how much would be the balance? That would be 30,000, because it 30,000 is remaining. And what date it would be? It would be 1st of January 2025. And it will go so on and on and on. So these are the transfer entries which we are doing from one period to another period. The balance being carried down and balance being brought down. It can be on the either side. If the balance is coming here, the carried down balance is coming on the debit side. So in the next year, it will be by balance brought down over here. Opposite. Okay. Is it clear, everyone? Yes, sir. So that is clear with respect to what? With respect to all the accounts which are of your balance sheet. Sir, you gave an example of cash account. That was a balance sheet item. But what will happen to the P&L items? What will happen to the P&L items? Will that be carry forward? Profit and loss accounts. Sir, what are the profit and loss accounts? For example, we have the purchases account. We have the purchases account. So if we have purchased a goods, let's say we have purchased from cash rupees 40,000. 40,000 is the goods purchased in the year and not other transaction in the purchase account. So what will happen at the year end? So at the year end, this purchase account will go to the trading account. This purchase account will go to the trading account. That is why the closing entry here would change. What I will do, I will open a trading and P&L account, which I did earlier also. All of you are aware of it. Now, in the trading account, the purchase account here is being credited. So the cross entry I have already written to purchases account. So here this balance will come 40,000. And in the next year, obviously this will not be required to be brought down because nothing has been written as balance carried down. Nothing has been written as balance carried down. So, sir, that means that all the purchase has been consumed. Yes, here all the purchase has been consumed. Whatever is left, it will be mentioned on the credit side as the closing stock. So, for example, out of 40,000, the goods worth rupees 30,000 are sold. So I will have 10,000 as my closing stock. Sir, what will happen of this closing stock in the next year? This year closing stock will become the opening stock for the next year. Sir, if next year nothing is sold, nothing is sold. So obviously the opening stock and the closing stock would be the same. 10,000 and 10,000. Sir, if 3,000 rupees goods have been sold, so 7,000 would be remaining. So your closing stock would be 7,000. These all information will be provided in the question itself. Okay, if it is not provided, so just do the ones which is already given. Because there might be the case that there is no opening stock and no closing stock, only the purchases and the sales. That means if I have purchased a goods of 4,000 rupees, that is my purchases, and I have done a sales of 6,000 rupees, and there is no information about the opening stock or the closing stock. So what I will assume, there was no stock in the opening as well as there is no stock left at the year end. Whatever is purchased has been sold. So by this you can tell if I purchased for 4,000, sold for 6,000, so 2,000 is my profit. So don't apply your extra minds which you used to do. Okay, you have to just do whatever is given in the question. So if I am applying my mind, it is coming profit. And if I am not applying mind, it is coming loss. So loss is not your personal loss. This is the loss of the proprietor who is in the question. Okay. So don't be concerned. What I hear from students, like in the case before here, I have just done a question right now. Okay. In this, students are not comfortable when I write the gross loss figure and I do the gross loss brought down on the P&L and I do the net loss at the bottom. Students are not comfortable for this. Why you're not comfortable, beta? This is the question. It is not your personal loss. This is the proprietor's loss. And obviously, if you write this loss, you will get marks. And if you don't write this loss, this will be your real loss in the exams. Okay. So if it is a loss, you need to deduct it from your capital. That is the proper accounting treatment. We are not here to make the business profitable. We are here to show the business whatever is being done. Chartered accountants, cost accountants, company secretaries, these are all professionals who do the work legally and within their boundaries. We are not here for misrepresentation. We are here for the presentation of the financial accounts. Okay. Whether one question has come that whether you only doing for calendar year if the opening entry in financial year. If the opening entry is in the financial year, that means you will close your books. You will open your books on 1st of April. Example, 2022 you have started. That is your opening date. And your closing date would be the last date, 31st of March 2023. So in the next year, this year would be called as year 22-23. This year will be called as 22-23 because it started from 22 and ended till 2023. But if this was a financial year, it would be sorry, it was a calendar year. It will start with 1st of January. It will end of 31st of December 2022 only. So this will be only written as 2022. That is a trick to understand. If they have mentioned 22-23, that means the financial year is the year of the accounting, starting with April and ending with March. But if they have just mentioned the year only, that is 2022. The calendar year will be your accounting year, starting with January and ending on 31st of December. Is it clear, everyone? So that was merely a general topic which I pointed you out. Okay. Then we can move forward for the things ahead. Let's go to the opening entries and the closing entries which we were talking. So here you can see the opening entry is an item passed in the journal proper or the general ledger. The purpose of this entry is to record the opening balance transferred from the previous year to the new year. The accounts are appearing on the asset side of the balance sheets are debited in the opening entry, and accounts which are appearing in the in the liability sides are being credited. So all assets, because assets is debit what comes in, all assets will be debited and all liabilities will be credited. So all assets account will be debited and all liabilities account will be credited. That is the opening entry which I am talking about. Yes, they have given here. So let's say they have given you, consider the following balances in the balance sheet of 31st of March 2020. You have to pass the opening entry on 1st of April 2020. So the year was ended on 31st of March 2020. Now we are opening our books again on 1st of April 2020. So on 31st of March, whatever was the closing will become the opening for 2020, 1st of April 2020. So if you see what is the transaction here, first one is the capital. So what we need to do for capital, all the liabilities will be credited. Loan from HDFC Bank, loan is credited, that is another liability. Then we have plant and machinery, the asset, that would be debited. Then the cash in hand, then the cash in hand, that is also your asset and it will be debited. Balance at the Citibank, again a debit balance, asset. Debtors are assets, again debited. Closing stock will become your opening stock, so that is also asset, that will be debited. And trade payables will be credited, that is your liability. Outstanding expenses is your liabilities that you need to pay, credited. And the prepaid insurance would be debited because it is an asset. You can see the whole entry as per this over here. Just check it out and do let me know if there is any doubt. Okay, so now we have completed with the opening entries. So what would be the balance brought down? The date here, the date beta here would be the 1st of April 2020, because we earlier closed on what date? 31st of March. After March, what it comes? April. So it would be 1st of April, not 1st of May. Okay. Moving on. So if you see here, first debit is 330. Then we have 20,000, then 175, 355, 135, and then 20,000. The rest all would be credited. Starting with 275, 275, then 425 and 295, 425 and 295, and then lastly 40,000. So obviously both the balances should match. All the debit should be equal to all the credits. If it is not matching beta, something you have done wrong or the question is wrong itself. Both the case may be possible. There can be mistake from your end or the question itself is a wrong. This model is just like a statement of affairs. Yes, a statement of affairs means your balance sheet only. Okay. Now, what we do when we close the books of accounts. So whenever we close the books of accounts, we debit the trading account will all with all the expenses. Trading account will be debited and all the expenses which are relating to goods. Expenses related to goods. For example, if you have opening stock, if you have purchases something, you have some factory expenses, freight and carriage, all these will be credited. Sir, you said that expenses needs to be debited. Yes, expenses will be debited, but at the year end, all will be transferred to the trading account. All will be transferred to the trading account. And for every income relating to the goods, that will be going to your trading account, and trading account would be credited for that. Trading account would be credited for that. So for example, there is some closing stock. So closing stock account debit to your trading account. That is the closing stock entry, which we have already talked about in the last class. Then for transferring the gross profit or the gross loss to the P&L account. So if you have the gross profit, our trading account will be debited in that case and your P&L will be credited. So what they are talking about? Okay, just see. Let's say we have some purchases of 4,000. We have sales of 5,000. So what is the profit? Sir, here I will write to gross profit 1,000 rupees carried down, and this is your balancing figure. So your trading account will match. Okay. Now what I have to do? I have to transfer this gross profit to my P&L account. How I will transfer it to my P&L account? I will use this journal entry. I will debit my trading account and I will credit my P&L account. So here you can see the trading account has been debited with the gross profit and my P&L account gross profit brought down. It will be credited by 1,000. So this is being transferred. This is the general entry for transferring the balance from trading to P&L. Now, sir, if we have a loss, okay, so let's say our sales was not 5,000, it was just 3,000. So 4,000 rupees goods has been sold for, let's say 3,500. It has been sold for 3,500. So I will have a by gross loss of 500 rupees. Okay, so my trading account will be credited and P&L account will be debited by the gross loss of 500. You can see in this entry, P&L account is being debited and trading account is being credited. So this is the entry for gross loss. Obviously, this you have done already, but this is the theoretical part of it. So just read it out. Okay. Now for transferring the expenses, just do the reverse. We have to debit the P&L and credit all expenses. Okay, just the way we have done in the trading account. Now, if we have income, just debit all the incomes and credit the P&L account. Just keep in your mind that P&L account will be debited when we have expenses. So for debiting the P&L, you have to credit the expenses. You have to credit the expenses, and P&L account will be credited by the incomes. So if you want to credit the P&L account, you have to debit the income accounts. Sir, why we are doing the reverse? Because we are transferring those balances to the trading and P&L account. That is why we are doing the reverse over here. That is just the transfers. Okay. And at last, when we transfer the net profit or net loss to the capital account, so what we do if we have a profit? So if we have a profit, we debit the P&L account and we credit the capital account. And reverse happens when we have the loss. We debit the capital and we credit the P&L account. For example, you can see here, let's say, let's go to our first situation where we had a profit of 1000 rupees. We have a profit of how much? 1000 rupees. Okay. Now we have expenses. Two expenses. Let's say I have expenses of 800 rupees. Now you can see I have a gross profit of 1000 and I have an expense of how much? 800. So what is the loss or profit? Sir, I have a profit. And for profit, I will write here the balancing figure. So here I will write 2 net profit. So what I have done, I have debited my P&L account. I have debited my P&L account. What I will credit? I will increase my capital. So earlier, let's say my capital was 10,000. I will add this profit because this will be owner's profit. I will add this profit. Now the owner will take 10,200 from the business. The owner will take 10,200 from the business because the profit is of owner. Sir, what if we have a reverse situation? Let's say if the expenses are not 800, but these are 1500. So now you have a profit of 1000 and expenses of 1500. So we will have a net loss of 500. It is your balancing figure. So your P&L has been credited and now you have to debit your capital, and for debiting your capital you will deduct 500 from your capital, that is 10,000. So if I deduct 500 from 10,000 it would be 9,500. The business has given a loss, so now this loss is also of owner, so I have to give owner 10,000 and take 500 from the owner, so net capital would be 9,500, which the business has to return to the owner. Because obviously, if the profit is of owner, then loss should also be of the owner. So that is why we have deducted the capital by 500. That is what they are talking about. In case of profit, debit your P&L and transfer it to your capital. The capital will increase. In case of loss, just reduce the capital and credit the P&L count, because by loss it will be capital will be reduced. Sir, do you know the Tamil? No, beta, I don't know the Tamil language, but obviously I use some accent because I have lot of lectures from the south. Okay. Okay, beta. Now we have another question where we have to do the closing entry. So you can see you have the purchases, you have the opening stock, wages, return outward, etc. etc. You can try the journal entries and verify it from here. If you have any questions, we can discuss in your next session. Now we have discussed about the opening entries and the closing entries. Now let's talk about a very simple topic, that is the transfer entry. What is transfer entry? From account A, if I transfer anything to B, so that would be called as a transfer entry. Sir, but what are these A account and B account? So they have mentioned that when it is necessary for an amount or balance of one account to be transferred to other account, it is done by means of a transfer journal in the journal proper. What does that mean? What is journal proper? It is the journal ledger which you are preparing. Okay, the list of the journal entries where we write the date, particulars, amount debit, amount credited, and the ledger folio. So I have to pass the journal entry. What would be the journal entry? If I have a capital of 1 lakh and the owners has withdrawn 20,000 out of it. So for 20,000, what journal entry I have passed? I have passed drawings account debited with 20,000 to cash account. The owner has taken away the cash of 20,000. So I have passed drawings account debited to cash account. So now what does this mean? That I have to take 20,000 from the owner. But obviously my capital is already at 1 lakh. So can I net off these two accounts? The answer is yes. How much we have to give to the owner? Sir, I have to give owner 1 lakh rupees. The business have to give the owner 1 lakh rupees. And how much the owner has already taken up from the business? He has taken 20,000. So what I can do? I can transfer this drawings account to the capital account. So that is why the capital account here is being debited by 20,000 and I will credit the drawings account by 20,000. So you can see the drawing account is credited here, the drawing account is debited here. So this account has been knocked off. It will be zero because it is debited and credited with the same amount. And my capital will reduce by 20,000. So the net amount would be 80,000, which needs to be paid to the owner by the business. Okay. So that is the all logic behind the transfer entries. Not a rocket science, but the simpler way which you have already done in the last sessions. So just reading out the small topics which can be asked for your 1 or 2 marks questions. 1 mark question, obviously. Okay. Now in the next class, what I'm going to do, I'm going to teach you about the rectification of entries. What do you mean by rectification? If I passed a wrong entry, then how can I correct that? So correcting means the rectification. I am rectifying the mistake which was done earlier. I'm rectifying the mistake which was done earlier. So that is called the rectification of errors. Obviously, when you are doing the accounting, not everyone is as perfect as we could understand. So if anybody in the accounts has posted the wrong entry, so we need to correct that entry. So why can't we just delete the entry? Because in some software it is not possible to delete the entries or the period on which the accounts has been made, that is closed. We are on the other period. So how can we correct those errors? Okay, so we are writing with a pen. We have no eraser in it. So how can we correct that entry? So that is what we are going to learn in the next session. Till then, do have a practice of whatever we have learned till now. We have gone through the concepts till now. That would be very easy for you, and do ask your doubts. Okay, those who have the exams in the next month itself, so you have to do all the MCQs which are given in the questions. Go through the internet if you get some other sources from where you can get more and more questions. That would be really helpful for you guys. Okay, see you all. Bye bye. Take care.